Greetings, this is Market MRI Pro, and this is my market update pre-market, October 25th, 2024. I title this, Did Tesla Save the Bulls? I can be reached at marketmripro@gmail.com, or feel free to comment in the remarks section and I will respond in due time. As always, the disclaimer, this is a Market MRI Pro is a new tool in beta testing. This is for educational purposes only. Any stock talk or recommendations should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make, and I may own or maybe intend to sell or buy any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. All right, let's take a look at the market. So I start with the timing model, and this is a weekly chart. It relies upon price versus a 30-period WMA and a proprietary indicator developed by myself and several friends called the Bongo. Now, if you go back to the week of November 6th, when we crossed above the WMA and turned green, or blue here on the Bongo for the first time, we entered a buy. You stay in a buy until you both close below the WMA and have the Bongo change color. Keep in mind that it is going into Friday's trading, so the weekly bar is not really closed yet, so I don't pay much attention to that change. I look down here and I see the dominant model, the weekly model, says we're in long mode across the major ETF for indices. Now, I do look at a daily model, and the daily model will be a little bit different. And the daily model is going to show you that on several, the Qs, the diamonds, and the Russell, we've now moved into a sell mode. How do I deal with that? Simple. It tempers my enthusiasm to the long side. I have not dumped all my positions. I have raised stops. I have raised cash, and I'm looking to buy more if this market resolves this bit of digestion. It's not an all-in and an all-margin market, in my opinion. Now, the other thing that's sitting here is this green line, which is a 13-week new high, new low, and it typically cycles from overbought to oversold. We are closer to oversold or neutral now on each of these, which makes me feel like the market might go higher from here. While look at the diamonds, we pretty much tanked, which is an area you expect a reversal. Now on the weekly, it's a little bit slower moving, the same because we're looking at 30 weeks of data. But you could see on the weekly, we've moved off of overbought areas. So long-term model still says buy, short-term says be careful, and the new high, new low is telling me get ready. If I look at the market briefing tab, it's got a number of different tools for looking at the market. This is just looking at stocks above certain moving averages, new highs, new lows, advances, decliners. And down here are some of the secret weapons. The little peach-colored X's are something called the Bongo, which is sort of the we're buying everything type of a market. The green bars represent something called the Eureka, which is a mathematically calculated analog to the IBD follow-through day. Different, totally, but seems to occur at the same time. The red is a Phoenix, which is the opposite of a Bongo. The triangle down is called a Hindenburg omen, which is a signal that only fires, rarely fires. When it fires, 1 out of 4 is usually very meaningful. The others are not. And there's not been a major correction that has not occurred following a Hindenburg omen since the Great Depression in the 20s. So I pay heed to those, but I look at a constellation or a confluence of signals to make decisions. So do I have any signals on the right edge? No, except the new high, new lows, and the distribution or the declining stocks. The market's weakened the last several sessions. I like the buckets view, which give me a sense through the major indices of where the stocks are in their within their Bollinger Bands. When you see red lines higher on the left than the right, that tells me the stocks have weakened and that we're starting to build up the collection of stocks underneath the Bollinger Bands. We know that the Bollinger Bands will capture 90% of the action of a stock. And when 10% or more of the market is below the Bollinger Bands, you have to pay attention that we're probably close to having some type of reversal. Now, to be honest, they can get to minus 25 or 35. But this is telling me again that the heat, the overboughtness has come out of the market. This thin gray line on top of the red tells me where it was 1 day ago, and then the wider gray down here a week ago. So what else can you say? That we've gotten weaker on the short term, and we've definitely gotten weaker as the week has gone on. And then I look at the performance view, which gives me a lot of insight into what the market did, what we could see across the top. If we rank by 1 day close, the leading ETF in the market was the Q's, up 0.81, finishing at 80% of its daily range. That's pretty bullish looking. The Russell was the second, but it finished in the bottom of the range, which is less exciting. And then the Spider was up 0.21. The only component to be negative on Thursday was the diamonds. Volatility was down. We still, if you look at the 6 and 12 months, have a lot of new highs, but on the shorter time frames, we're seeing the new lows pop up. All right, that's, again, the market's eased off. Over here are three analysis, or three different indexes, the 1500, the NYSE, and the NASDAQ. We take each of those stocks in those indexes and assign them to their particular sector and industry group. We know that on Thursday, 64% of the sectors in the S&P 1500 were up, which is an improvement over what we saw on Wednesday. 52% of the industries were up, an improvement over what we saw on Wednesday. 52% of the stocks were up, and only 45% of the stocks are above the midline of their Bollinger Bands, which tells me the market is not, it's neutral at best. The NYSE, similar types of numbers, and the NASDAQ. So it gives a sense of, is one of these indexes working better? And then within the index, what are some of the internals? Over here, let's look at 1 day change. And these are updated real time in the program. You can see the leading groups on Thursday were discretionary, communication, and technology. Not a big surprise about discretionary because Tesla was a big driver of the markets. Real estate is interesting, and you'll see that over more of an intermediate basis, this might be one of the places to take a look at, which is real estate. Down below, you can see various themes. Clean tech, I'm sure they have Tesla. Norway, transformation data sharing, fintech, and so on and so forth. So you can get a sense not only of the indexes with some internals, but the sectors and what themes are working. Now, if we go into the last of my top-down analysis, I've already addressed where I think the market is, which is questionable. Probably, I'd say close to neutral is my feeling on the market here. I can look at various charts here of the sectors versus the spider ratio charts. What I'm looking for are things that are going up towards the upper right-hand corner, and you can see the strength in XLY versus the spider and XLK, discretionary and technology. I look for things that may have shot up in the last session. And when I look at that, does anything pop up to me? And you can see real estate has had a short-term move. Clearly weakness in materials, energy is weak. You could see how weak healthcare is and has been. So again, I'm trying to narrow my focus, but that's only one of the top-down tools that we've built for you in Market MRI Pro. Now I'm going to go into what's called the JAS layout. And this is what works for me. And it'll be customizable so each individual can set this up to fit their perfect trading system. What we have here is several watch lists over here. And these are the major industry components. Now we've pre-filtered the NYSE plus NASDAQ for $1 and I believe 100,000 shares. And when I do that, you'll probably notice there's about 3,800 stocks when it's loaded all up here. I'm still, for better or worse, sitting on a cruise ship. And I don't know the last time any of you tried using the internet on a cruise ship. Even with Starlink, they limit you to 3 or 4 megabytes per second download and only 1 upload. It's horrible. So in this window here, I've listed all the stocks in my list, and I've got things like last price change, percent change, how many up impulses they have, how many down impulses, when did their daily bongo change in what direction. So if I look at a 1 on this AAT, I know right here that they had 2 positive impulses. Its daily bongo just flipped to a buy. Its weekly bongo's been in a buy for 26 weeks. These are the 3 short-term, intermediate, and long-term momentum are positive. It had a lot of volume in the trade. Its on-balance volume is greater than its moving average and has been up for 9 bars. And the daily relative strength versus the spider is positive for the last 2 bars. So there's something going on with AAT. I don't know if I like the pattern or not, but I might just flip on it. And yeah, I don't bottom. I do like this. Take a look at this. Nice uptrend, pulling back and moving higher. You could see decent volume on Friday. You could see a dot for the CPR, which is a separate trading system. You've got a dot here for volume. You have recent squeeze, and both your relative strength and OBV are green, which means you're outperforming the market. So AAT might be something to look at. I've done no other research on it. I'm just trying to show you how these tools work. Now, if you're a bottoms-up person, you might sit here and go JF, take the short-term momentum and rank them, and what comes to the top, no shocker, Tesla. Now, Tesla, as you're going to see, remember I'm on slow internet, takes a while to update, had a massive move. Now it's getting into triple top area, so I might be a little careful. And we could see on the high jump, though, it's not as extended as it's been in the past. So could it go higher? Absolutely, it could go higher. Is it likely to pause a little bit and consolidate? I think so, but certainly could see this continue higher. Notice down here, this green dot is a independent system I call the EMS system, and it's an early system that picks up new trends very early. Early means it'll whipsaw you too. The next dot is what I call my CPR signal, and that is another buy-sell signal system. Then I've got 4 dots here. I've got a gap, volume, breakout, and momentum. The PSAR just flipped colors. That's great. I just crossed into positive of the relative strength versus the spider. Actually, got it backwards here. The OBV versus the EMA here, and the relative strength versus the spider. So this one really looks good. The issue is after this move of 21%, is it likely to take a breather? Now, ServiceNow, they had earnings come out as well, and they are closely linked to the AI industry and supporting companies, and you can see a very nice uptrend pullback and a breakout here. Similar story by high-low jump. It's 76% says it could still go higher, so it's not overly extended. The EMS turned on. You had your 4 dots, and again, new signals on the relative strength and the OBV. West Pharmaceuticals, WST, is another big mover on earnings, and but it's below the 200 and one I'm not likely to chase. And we'll look at one more here, CACI. Don't know anything about CACI International, and it's a very expensive stock. But look at what happened in here when the blue lots came in, the EMS signal, the CPR began a massive run. It just broke out again. It's a pretty expensive stock to chase, and it is definitely extended. Look how far it is from that 200-day moving average. Now, that's one way I could ferret out the strength. Another way is to filter. So I'm going to go in here, and I don't like volume less than 500,000 shares, so it's got to have at least 500,000 shares. I don't like cheap stocks. I want to be at least $5. And I'm going to look for one of my favorite scans, which is 2-day force up. And these are looking at stocks that have had interesting momentum 2 sessions in a row. One of them here was Texas Instruments. You can see 2 momentum dots in a row. Now, this thing had an uptrend sideways move. Is it getting ready to move? It might be. That might be one to pay attention to. Robert Half International, below the 200, I don't like to chase. LOMA, this is in the basic materials. I like the uptrend, the pullback, and the breakout. So to me, the reason you use scanners is so that you can look at markets and instead of looking at 4,000 stocks, bring the top ones up to the top. Now, I'm a top-down guy, and I'm not really done at service right now because I should be looking at the leading sectors and industry groups. So if I go and I hit top-down, I'm going to put every one of those stocks into their respective sectors, and then I can rank this by the same short-term momentum, and I could see, in this case, well, you can see right away that it doesn't necessarily follow the order of the gain because it's looking at more than 1 day's move. But coming to the top is real estate. If I click on real estate, open on the right, I list now the different industry groups in real estate. Let's rank that by momentum, short term. And I could see that real estate services comes to the top. So I had 185 real estate. I've got 18 real estate services. Let's stick with the theme of short-term momentum and click on it a couple times. And what comes up to the top is CBRE. Now, I think CBRE looks very interesting here. Let's get CBRE to load, though, because it may look a little bit like this one, but it's different. Big uptrend, sideways move, and a breakout. Yes, it's extended, so I'd like to see it pause a little bit and consolidate. But it's going to go on a watch list. CIGI, Collier's International Group. Don't know this group from Adam, but a similar pattern. Big uptrend, pullback, and a breakout. Look at the volume. Here's your 3 dots. Volume, breakout, momentum from a squeeze, which is the yellow line. And both relative strength and OBV are green, which is what we want to see. The next one is Jones Lang LaSalle, I think is what it's called, JLL. At least it used to have those 3 names. What do they call it now? So let's take a look at that one. Uptrend, pullback, breakout, not overly extended. I like that one a lot. So I can be checking these off as I look at them, hit the plus sign. Now I could go through and look at other of these, but let's look at technology. So I'm going to click on technology, and that's going to open up all the technology industry groups ranked by JF, and then all the technology stocks. So we already looked at Now and CACI. Another one that pops up here is TYL, Tyler Industries. Now, I'm not going to go out and buy thousands of shares of a $600 stock. Some of you might be. But big move up, sideways move, and a breakout. So what I've been able to do, and Praveen, my partner and programmer, has been able to do, is build a tool set that allows us to target my type of setup, which is a pullback after an uptrend with a breakout, and then apply top-down techniques of sector and industry group analysis to drive those stocks into a watch list. And then with that watch list in hand, I can then go into the book view, which is under construction. And so there's a few changes that are going to occur. But what we wanted to do is set it up so that it will self-populate with all the stocks that we picked on, and it'll give you a view on the left of the daily and on the right on the weekly. Now I've got two things having to load, or four charts with my super slow internet, so it may take a couple seconds. But the intent is that now I could look at not just the daily, I could look at the weekly and make sure that the weekly chart is consistent with what I want to be doing. So I hope you like this tool. I'm very excited to bring this to market with Praveen. I look forward to hearing your constructive criticism, positive or negative, things you'd like to see differently. There are a few more things that we have to complete. We have a complete set of traditional indicators to add. There's some drawing tools and then some customization of the chart. But this thing should be launched within the next 30 days, and we'll be looking for some beta testers. Have a great Friday in the market. We'll see you over the weekend.